We are less than 5 weeks away from the 2024 election, and while American voters decide their fate between Kamala or Trump, there is a much bigger problem rising up in the US that won't be solved no matter who wins the election. The future of the US dollar is changing, and renowned American economist Art Laffer, who previously served as a White House economic advisor, warned his fellow Americans that the US dollar is becoming an unhinged paper currency. His argument is one that's hard to refute. The US government's use of the dollar as a political weapon through sanctions and other measures has eroded international trust in the currency. This loss of confidence is driving countries to seek alternatives to the dollar, potentially leading to its eventual replacement as the primary global currency. What's more worrying about the US dollar's future is that neither Trump nor Kamala has a solution to fix it, because this is not a policy problem, but a debt problem. The United States is the most indebted country in the world, and their only solution is to simply print more money, which only further devalues the currency and moves the rest of the world closer to de-dollarization. But while the media focuses only on the US election the next few weeks, there is another event taking place on the other side of the world that will outline the exact future of the US dollar. The BRICS Alliance will host its annual President's Summit next month in Russia, and the timing of this event couldn't be more symbolic, as it will be held 2 weeks prior to the US election. Last year, when the BRICS presidents met, they officially announced the expansion of the alliance to include several new powerweight countries, including Saudi Arabia, Egypt, and the UAE. Expansion is once again another focus point, as 24 new countries have officially applied to join the BRICS alliance before this year's annual summit. We'll see exactly how many countries are accepted into the organization in 2025, but one thing is for sure, is that interest and demand in BRICS and their plans for de-dollarization is skyrocketing. It was reported this week that this meeting will introduce a multi-currency payment platform along with a roadmap for a gold-backed BRICS trading currency. This roadmap is what's important, because the BRICS alliance has been hinting at launching its own gold-backed currency for a while now. And while this still may be a few years out, the BRICS alliance has announced their intentions to create an inclusive international financial system, one that is free from sanctions and restrictions and will remain open and inclusive to every country involved. China is the country that has made the most progress in using its currency, the yuan, for international trade. This chart from the Brookings Institute shows the trend of non-traditional currencies being used as a global currency reserve, which began aggressively increasing in 2010. Fast forward to today, and the Chinese yuan's share of international payments reached a record high this summer, as the Chinese currency has become the 5th largest currency in the world for reserves, payments, and trading, and the 3rd largest currency for commercial financing. This chart reveals just how much China's economy has shifted away from the US dollar. In 2010, an incredible 83% of China's cross-border payments and receipts were made in US dollars. At the time, China and the US enjoyed a fruitful relationship. Tensions between the countries were relatively low, and China had no problems using US dollars in trade. But in 2016, Donald Trump launched the trade war. He began imposing tariffs on Chinese goods, and for the past 4 years, the Biden administration has done everything in their power to cut off China from US technology and limit China's growth. Of course, this would result in China strategically shifting away from US reliance. And when China needs to pivot, they can do so faster than any country on earth. Take a look at that chart once again and see how quickly China has shifted away from the US dollar. Today, the majority of Chinese border payments and receipts, some 53%, are in China's local currency, with this percentage increasing as each month passes. One of my favorite financial insiders is Richard Turin, an American author who wrote a book about China's digital transformation called Cashless, China's Digital Currency Revolution. Richard makes the argument that there is a perfect storm brewing for the US dollar's demise, and it consists of 3 factors: sanctions, debt, and technology. For decades, the world has never had the technology to develop a payment system that escapes traditional US dollar banking. But with digital currencies, stablecoins, commodity-backed tokens, and the rise of crypto, the technology is already here. If you pay attention to what's happening in global markets, there have been large warning signs, even in traditional Western media publications, like this article from the Wall Street Journal, which warns the dominant dollar faces a backlash in the oil market. At the end of last year, JP Morgan announced that 20% of global oil sales were bought and sold in currencies outside the US dollar. This absolutely should be a red flag for all Americans, as oil has been traded exclusively in US dollars for many decades. The United States' close relationship with Saudi Arabia is one of the biggest reasons the US dollar has been so strong for so many decades. But even the Saudis have proven that not all good things last forever. Earlier this month, it was reported that the Saudis are now open to the petro-yuan and want closer ties with China moving forward. While the US has built a close relationship with the Saudi government by guaranteeing them US military protection for the past 50 years, China brings an entire new element to the negotiating table. The Saudis are interested in some of China's most advanced products and industries. China leads the world in electric vehicles and has become the dominant player in renewable energy and even launched China's first C-919 passenger jet, all of which the Saudi government hopes to import into their country to help diversify their economy. China and Saudi Arabia have already signed a 3-year currency swap agreement last year worth 50 billion yuan, that's equivalent to just over $7 billion US dollars, to increase non-dollar trade between the two nations. But the Saudis aren't the only ones making big moves on the international stage. I made a full video on Turkey's decision to formally apply for BRICS membership earlier this summer. And leading into next month's annual BRICS meeting, I feel this is one of the most important storylines to follow. As indicated in this article, Turkey's BRICS gambit is just what Russia ordered, as Turkey's President Erdogan will be in attendance at the BRICS summit next month in Russia. Don't forget, Turkey is a full NATO member and the gateway between Asia and Europe. Turkey originally was interested in formally joining the EU and started the process of EU membership in 2005. But here we are, nearly 20 years later, and still no EU membership for Turkey, forcing them to seek alternative options, like aligning with Russia and China and joining the BRICS organization. As Donald Trump tries to win back the White House this November, he has vowed to his fellow Americans that he will keep the US dollar as the world's reserve currency. But politicians are used to making empty promises, and I want to bring this full circle and share with you more insights from economist Art Lafer, who reveals how the US dollar's collapse is directly affecting Americans living inside the United States today. There's nothing that can bring an economy to its knees quicker and faster than unhinged paper currencies. And those unhinged paper currencies lead to high interest rates, they lead to high inflation, they lead to a huge expansion of the Fed's balance sheet. We are moving away from monetary stability. We are moving towards an unhinged paper currency. Record high interest rates, inflation, huge expansion of the Fed's balance sheet. This is literally exactly what has been happening to America's economy for the past 4 years, making life for the average American harder and more difficult. Once again, we see a direct correlation to the loss of trust in the dollar and the rise of alternatives. Gold, something I've been reporting about for many months now, continues to set all-time highs, while other alternatives like Bitcoin continue to gain momentum. Everyone, as you can see, the world is shifting. Moving forward, de-dollarization is something that you will hear as a key strategy for many developing nations as they seek to diversify away from the US dollar and, more importantly, the US government. But now that brings us to the investing portion of today's video. And I want to highlight a company that I've profiled several times before, but is once again crushing results and plays right into this story of de-dollarization. It trades under the symbol DEFTF, and it's been one of the best performing stocks this year, up over 310% year to date. Jerome Powell and the Fed just cut interest rates for the first time in 4 years, stating we concluded that this was the right thing for the economy and the people we serve. And as a result, there are going to be some unique opportunities in the market, and let me break down why I believe DeFi Technologies is one of them. Like I mentioned, the company has been performing very well all year long, and recently DeFi announced that they filed for uplisting to the NASDAQ. If approved, so many new funds and institutions could buy the stock. The crypto market is also heating up, and DeFi Tech gives investors a chance to gain exposure to the crypto market through a company that is already profitable and experiencing record revenues. DeFi Tech's achieved its strongest financial quarter to date, and during its second quarter in 2024, experienced record revenues of US dollars 98 million and 94.4 million for the 3 and 6 months ending June 30th, 2024, along with a net income of US dollars 66.5 million and 53.2 million for the same periods. So let me help explain what the company does to generate so much revenue and drive such impressive net income. The main business driver is the 100% owned Valor Asset Management company that provides ETPs for the cryptocurrency industry in Europe and is expanding to new frontiers. You've probably heard of ETFs. Well, ETPs is the European version, and the key to success of this business is that Valor obtained their license early. This regulatory process takes years for new entrants, so Valor can continue to be a leader while competitors are still tied up with red tape. The real kick to revenues and extreme profitability comes from DeFi infrastructure, because the company earns 8 to 10% on assets under management through a combination of management fees, staking, and lending. On top of that, the company owns Reflexivity Research, a profitable consulting firm founded by Anthony Pompliano. Pompliano is a shareholder of DeFi Technologies and one of the most trusted voices and insiders into the crypto industry. Pompliano just announced his company, Reflexivity Research, will be hosting a Crypto Investor Day on Friday, October 25th, and will bring together over 1,000 industry leaders, investors, and entrepreneurs to the event in New York City next month. Like I said, Pomp is one of the most respected voices in the crypto space, and here is what he recently said about DeFi tech. My best analysis is that this stock is wildly undervalued at the moment, and given the sector that it operates in, along with the products that it has in the market, there should be strong tailwinds through the rest of this year. To give you an idea of how much management believes in this company, consider that 45% of DeFi Technologies is owned by its senior management and founders, the insiders. You know you are highly motivated to get up in the morning when you own 45% of a $600 million business that you believe is worth much more. Warren Buffett owns 33% of Berkshire Hathaway and goes to the office every morning at the age of 94. What I'm getting at is that, like many other founder-led businesses, Tesla, CrowdStrike, Nvidia, Meta, and Amazon, DeFi Technologies is led by the founders. Lastly, Olivier, the CEO of the company, bought 900,000 shares on the open market. In total, the CEO owns, with his close associates, 17.9 million shares. That is over 40 million reasons and dollars to make this company more valuable. The founders and management really think the company is undervalued and have announced a massive buyback program, and they're only scratched the surface. Everyone, there are a lot of smart people banking on a future with less US dollars and more crypto in play, and this is one of the best companies in the space. But as always, I want you to do your own research before making any investments. And to help you with that, I'm going to provide the investor presentation, the website, and the stock ticker down in the description below for your reference. Everyone, as always, thank you for your incredible support. We're going to keep you posted as we continue to watch the development in BRICS, de-dollarization, and everything affecting our global markets, and of course, the future of the US dollar. Thank you all for making it to this point of the video, and thank you for your incredible support. I look forward to seeing you all in our next video soon.